Guys, welcome back to the part 2 of this particular direction and entries. So let's dive in. Before we continue, don't forget to hit the like and subscribe button to support the channel. So now let's dive in into it. So on the previous video, I stopped at price making series of higher highs, higher lows to complete this particular range. And always put it in mind, when price is reacting from when you are bullish and you see price dropping down like it's selling, know that price is reacting from a particular level, and that can either be a change of direction or maybe just a retracement. But when your overall bias is bullish, that's just a correctional move. Maybe price is just coming back to take out internal range liquidity before pushing back up, or price is coming back to use a particular key level. As you can see right here, we are bullish, right? Price just sold down here to take out this liquidity right here and use this particular key level to continue the range, right? So now let's dive into it. I think I didn't explain this particular setup. Basically, I just did a simple break and retest here. There was nothing much here. I also shared this on my Telegram channel because this was where I was planning on looking for buys from this zone. Like I was expecting rejection from this particular zone, so I just did a simple break and retest. And basically, okay, let's see, you can see liquidity is always protecting my entry, right? For SMC traders, they'll call this a breaker block entry, right? You can see this is a very clean breaker block entry, targeting where the previous low that was created. Now for me personally, I'm always careful about my target. You can see immediately after price took up my target right here, it started flying back up, right? Despite it came back down, what if price, I was holding maybe my target towards this particular level, price went down, started moving and take me out? That's how I would have lost the profit that I've already gotten. So I'm always specific about my target. I'm very careful about my target. I have specific positions, like specific areas I target, right, to reduce the risk of me taking a massive loss, right? I already explained this one, right? Same thing here. Okay, let's me see if I can break it down on the lower time frames also. Let's see on the higher time frame rather. Now observe that level I marked out on the daily time frame. Now if you observe on the daily time frame, this is a QM right here. Now let's go down to the 3 hours time frame. You can see that on that QM, price was reacting from there. You can see this particular week right here, price was reacting from there, right? And I had this particular support with inducement protecting it. So of course this is going to be my entry. Now there is no sweep right here, so I've just basically applied the SMC structure, because this particular strategy I use is basically the combination of SMC, CRT and S&R to create a particular concept in order to get good and clean setup, right? You can see how price came in, tap in on that level and push higher. Remember, targeting previous high. This was my target right here, targeted the previous high, and price kept on buying and buying and buying. Now don't forget, we are still on a bullish move, right? Now immediately price took out my target, price started selling back down, price started selling back down. Now this is the second entry. How did I take this particular entry? You can see, number one, inducement is already checked. Number two, we already have our break of structure, our multiple break of structure. Now looking for directional bias, while you get your rejection for a particular level on the higher time frame, one thing you need to you must get a break of structure. You can either SMC or SLP traders, they mostly wait for double break of structure. I wait for single break of structure. Now double break of structure is much better. It's much better for you to like be completely sure that this particular entry you're taking is a good one, right? It's much better. so you decide to wait for that particular one. Now you can see how price came back down and use this particular support. Now why did I use this one? Why did I not use this particular one right here? Two things. Number one, this one is more closer to the liquidity. Number two, okay, let's say three. Number two, this one has the sweep right here. This one doesn't have a sweep. Number three, I told my student to know a particular reliable support, like a good support, a high probability apex, which is also a support, or a resistance, have an engulfing. Now what I'm trying to say, I'm not trying to say this particular apex can't hold. Yes, it does hold sometimes, but a high probability one is the one that has an engulfing when the recent candle is bigger than the previous candle. You can see same thing applied here. The recent candle was bigger than the previous candle, right? You can see it's most like that. It's like a high probability one for me personally. That's how I basically see it, right? So I always take my entry from that particular level. Now you can see price came in, tapped, and is still moving to the upside, right? Now this particular level, I saw how price was reacting from this particular zone. This particular entry was basically from the, I think, the 5 minutes, or okay, yeah, this is basically an SMC entry. Price reacted from this level and gave a market structure shift right here, right, and giving a sweep of liquidity right here. If you observe, price came back to use the apex right here, but I was using this breakout block. So if you observe, my stop loss is covering the whole section. So even if despite price still came back to use here, I wasn't stopped out and I ended up selling because I have this particular level in mind. In a bullish market, you can look for sales. In a bearish market, you can look for buys, but you need to be very careful, especially when you are going against the trend. You need to be very, because price can still decide to go against me here and started buying, right? So it is very important. You need to be very careful. There are some things you need to put in place in order to say that you want to go against the buyers for some short while. And especially, I always say targets. You can see where my target is. Imagine maybe I was targeting this low right here. This is how price would have turned back, going to take me out. You can see how I'm always cautious about my target. I don't aim for much. The highest I can go for is 10R. I don't go above that. The minimum I can go for is 5R. That's my target. I don't go above that. You can see this one is 10, 10. This one is 6. This one is 7. This one is 7. And I basically target the same thing over and over again. So basically, you can see that if this particular entry goes to TP, I can still keep on buying and buying until price gives me a particular reason to think that maybe the direction is changing. Maybe price can decide to react from this particular level because this is a good one. Price can decide to react from this particular level. So I also have that in mind. So I'm not going to just like draw my target to an imaginary place. No, I'm very cautious about it. So I go gradually looking for my buyers, looking for my entry. So basically, this is basically the entry, right? We get our rejection, we get our sweep, our break, our inducement, right? Our recent high, price came back, our entry from the apex, price pushed back up. You can do a break and retest entry from here, price go up, price created inducement, come back, touch the entry and push back up to your high. So this is basically the clean structure, right? You can see your first entry from here, stop loss below the low, target the previous high, 7R. Second entry from here, target the previous high. You can decide to give yourself 5R, or like that, you get your good setup, right? So that will be it for today's video. Thank you guys for watching and stay tuned for more video. Peace out.